are you wondering what's going on with interest rates? I mean, if you've been watching these every day, they're like going up, they're going down. Like, how do you get the best interest rate, and what really is going on with the mortgage market? Well, you're tuned into the 5 to 5 here in Tucson, Arizona. I'm Heather McLaren, a licensed real estate agent with Long Realty, and I'm here with Chelsea Clark, who is a licensed mortgage consultant with Long Mortgage, and she's going to help answer some of these questions. Take it away, Chelsea.
Thanks, Heather, for having me. I appreciate it. So yes, I'm getting that a lot. Interest rates are changing constantly. I'm going to go ahead and share my screen with you real quick, just to kind of give you a visual on what the market's doing and really what's going on. So hopefully you can see this, but this big, lovely dip here, I'm not going to explain what all this means, but this dip was really when COVID-19 hit and the coronavirus, and the market shifted dramatically and rates just, skyrocketed. They really increased going down this way, and then they took a dive or decreased going up. I know this is the complete opposite, but going up means rates are decreasing. So essentially this is where we were 2 or 3 weeks ago. And we're just starting to balance ourselves out. So essentially with interest rates, the best way I can describe them on how you even get an interest rate is by 3 main factors. That's a credit score, your debt to income ratio, which is pretty self-explanatory, how much debt you have in comparison to your income, and then the loan amount. And it's all based off of tiers. So I wanted to describe that a little bit. But as far as your credit score goes, if you have a 720 score or above, you're going to be in the top tier for pricing the best possible interest rate. The next tier below that's a 680 and plus, and then a 640 plus. So it kind of adjusts. There are lots of factors, but that's just what I see as far as the next bump in rates. A lot of people don't know, but rates are done in 0.8%. So like 3.5, 3.625, 3.75, stuff like that. They go up by 8ths.
Sure.
And a lot of people get confused with the difference between interest rates and APR. And all the APR is your interest rate with the fees broken down into a percentage. So the fees are attached, so to speak, to your interest rate and written as an APR. But that doesn't mean that's what you're paying on your payment. So those are really good things kind of included there.
Oh yeah, I get that question a lot. That's good to know.
Yes. It's also how you find those pesky hidden fees. A lot of people give me loan estimates from other lenders and it doesn't mathematically break down. It doesn't make sense. So that's where I go back to their APR and go, well, we're missing about $600 worth of fees that they're not showing you here. Let's break them out. It's being a transparent lender is really important, especially at this time. So knowing what you're paying, I mean, I always say, and it's kind of silly, but you'd never walk out of a store and pay for a pair of shoes unless you knew how much they cost. So we got to make sure we know what we're paying for.
That's great. So you give out cost sheets and kind of break everything down for clients right away so they know what they're.
Absolutely. Yep. You shouldn't even have to ask.
Yeah. That's
get it right away.
Wonderful. No, I do get that a lot from clients where they've been referred to someone or their family or they bank there or something, and then they're like, I can't figure it out. They're telling me like, oh, well, worry about it when we get closer. It'll be a good rate, or we'll get you later. Don't worry. And it's like, they're just, what are you getting into, So.
Yes.
Well, and can I ask you one more question before we get off about interest rates? They're kind of, since they are a little volatile now, how does someone guarantee the best rate?
So you definitely want to be connected with a lender who watches rates by the hour. I pay for a service that allows me to lock in at the best possible times. I watch the stock market all day. So if you are working with a lender that you really don't know and they're not sharing the information with you, I would consider getting a second opinion. Interest rates, they go off of people's feelings with the stock market. So if people feel negatively, they're going to pull their money out of the market. And that's going to hike your rate. So you want to make sure that you're getting in at the best possible time. So getting with a good mortgage consultant, somebody who knows what they're talking about, they're educated, like myself, hopefully, you'll be able to lock in at the right time And I lock in at all hours of the day. Sometimes I send a message to my clients, you know, at 7 o'clock at night saying it's time to lock you in. I need to do this now.
Yeah.
And sometimes it's really early in the morning. So it just kind of depends where the market is, and it can be unpredictable. So it's important for the lender to be up to date with everything.
Well, and when can they do that? What if they're looking and they want to offer soon, but they haven't purchased? Do they have to be under contract to lock on something?
That's a really good question. So Prosperity and Long Mortgage, we have a product called Lock, Shop, and Home. We're the only ones in Arizona that I'm aware of. I've never heard of this product ever, that allows you to lock in for 90 days without a purchase contract. So if you're on the fence and you want to take advantage of the low interest rates, and you just haven't found that home yet, we can lock you in at the interest rate that's for that day or whatever time frame we're at, and for 90 days. So essentially you have 45 days to still shop for your home, and then that next half or 45 days or so for closing your contract. So it's a great opportunity. We don't really talk about it enough, but it's amazing.
That's fantastic. Yeah, I don't hear about that a lot.